You, Jason, welcome back to the show.
Thanks, Kerry.
Hey, so interesting things going on here in the markets. I mean, we turned from where every time gold would break out and silver would break out, where within a day or two, they would just get slammed back down and wind up being below where they broke out, to now where this thing, I wouldn't call it a sustained rally, but to the point where at least it's ahead of where it started out or not too far behind, right?
Right. It's exciting. It's encouraging. For the first time in a long time, we're really seeing a breakout that has all of the signs of having some duration, of lasting. I mean, from the technical signs to the fundamental signs that are going on, and the fact that, we didn't see paper shorts come in and slam it down right away and try to, keep sentiment bearish, but it's actually kind of held gains, consolidated gains, and continued to inch forward for a couple weeks now. So my view of this is that this breakout seems different than the past ones that have failed, and I've turned increasingly bullish over the last few weeks.
Not to say that they won't come in at any given moment and throw rain on the parade, though, right?
Right. That's always possible. I don't think they're out of the manipulation game completely, but I think we have started to see some signs that maybe the price manipulation is starting to wane. For the first time, we have, the financial press actually running stories about banks being fined for gold manipulation. So it's now on record. It's no longer conspiracy theory, which is kind of indication for Gatta and some of the other people that have been documenting the manipulation for a long time. And then, of course, we have the gold and silver fix, banks giving up their seats, and now the silver fix to end. So it feels to me like maybe they're starting to get out of a game that's no longer as secretive or lucrative as it used to be. And I think the consequences of that may be that we get a little better free market price discovery in gold and silver. And if that's the case, I think we have a lot of upside over the next year or two.
And maybe they're long and they just want it to go up, right?
Could be. They could have, switched sides or just realized that, they were on the wrong side. And there's a lot of short covering going on this recent rally. And there's lots of people that are no longer willing to take the other side of the trade. So I think they're scared that we could be at the start of another big move up. And certainly the technicals are signaling that. We have both gold and silver popping above resistance that's been in place for a long time and above both key moving averages. So the RSI continues to point higher, and we have a new uptrend in place. I'm not 100% convinced that it's gonna hold yet, but it certainly looks good for the time being.
Yeah, and really the market's been acting differently since the end of last year, the beginning of this year as well, right?
It has, and there's a number of different things seem to be coming to a head a little bit, is the feeling that I'm getting. We had the GDP report, and I thought this was really interesting. It started out as a forecast of 2 or 3% growth, and that wasn't too long ago. And then it was -1, and now we have a revision down to -2.9% for Q1 GDP. So that's pretty significant contraction. And the only thing you're hearing from the financial press is, oh, well, next quarter is going to make up for it, and we'll be, back to even or whatever. But I'm not quite sure that's the case. And it was interesting to see how precious metals reacted to this news and how stocks reacted to the news as well. They didn't drop as much as you would think they would, given this kind of contraction, but it certainly lit a fire under gold and silver, which was good to see because it's somewhat of a reversion to the safe haven status that gold's had in the past, but hasn't always had in more recent years. So I think we'll see that trend continue.
Yeah, and they're all chalking it up to the horrible winter weather in the U.S., right? I mean, it's bad weather. That's what it's all about.
One excuse or another, it's the weather, or Yellen saying that, there's just noise in the data, whether it's the GDP numbers or the inflation numbers that are, picking up for the first time in years. It's an aberration. It's just noise. Hey, don't look there. Look over here instead. Which to me, it's working, which is kind of amazing that people are still fooled by this. But it shows that I think an increasing desperation to try to hide the true underlying health of the economy, which isn't that strong, and to try to hide the fact that inflation is finally starting to pick up. I think it was the highest in several years and above the Fed's target rate for the first time in a while as well. And I don't know how they're going to spin that story, but the money has certainly been created and it's been there for a long time. But it's the velocity of the money has been the issue thus far. It's been at a multi-year low. So if that velocity finally starts picking up a little bit and all of that money and credit that's been created starts circulating throughout the economy, I think we do see inflation start to pick up more significantly. And of course, anyone that does grocery shopping or buys gas or college tuition or anything else knows that it's been here for quite some time. But when it starts showing up in the official numbers that the Fed and the government uses, you know that things are turning.
Hey, I got a couple numbers here because hearing recovery. And yet, when I look at new home sales, now it's at 350,000. In March of 2007, it was at 850,000. Not exactly the kind of numbers that recoveries are made of, right?
No, it's not. To me, it's a lot of spin, in the housing market and in other markets. In the employment report, for example, if you really look at the number of employed people rather than just the rate the government uses, there hasn't been any recovery. So, it's, what do they say? Statistics, damn lies.
Yeah.
Whatever the exact quote there is. But I worked in analytics for a long time, and I worked for corporations. And there was always the sales guys or the marketing guys that wanted to paint a certain picture in order to get more of a budget the next year. So they'd always have me tweak things a little bit. And there's so many little things you can do by looking at the data one way or another to kind of give people the impression that you want. And I think it's no different what, the BLS and other government agencies are doing to try to, retain confidence in the markets and to keep the rally in stocks going.
Yeah, and this time is no different. And what are you thinking about the stock market? Is it just unsustainable at the current level, or can it just keep going on because the Fed keeps printing more money?
Yeah, there are so many indicators that suggest that it's overvalued and that it's toppy, but they've been suggesting that for a while. And we're sort of in uncharted territory with the amount of intervention in the markets. So it's kind of hard to tell because you don't have a real good historic gauge to say, how does this work out? I think eventually there's a big crash coming. It's really hard to predict when that will come. You have some indication that there's foreign buyers of stocks kind of propping up the market on the behalf of the Fed or on behalf of the government. This sort of plunge protection team, how are all of these different pieces involved in keeping prices moving higher? And is it really, are the prices really moving higher and investors really bidding up prices? Or is there something else going on? Because, there's lots of numbers showing that insiders are selling, that volume's down, that so much of the trading these days is just on bots. And I think you have to be really cautious with stocks. And that's what's good about precious metals. You can sort of diversify your wealth, have some of that in bullion that's in your hand, that can't evaporate overnight. So that's kind of my feel for it.
Yeah. And, it's just fascinating to watch the thing because, it just keeps going up, although it's kind of been in a channel lately, but with new highs every few weeks. And, and as they always say, stocks climb on a wall of worry, and it's been a dull market. So you never really want to sell short in a dull market, as that old maxim goes. And yet, here we are. It's after that crash in 08, 09, it's higher than it was before. So,
yeah, the recovery's been amazing. And the thing is, all of the conditions that caused that crash, all of the instability, all of the high levels of derivatives and everything the banks were doing that sort of created the crisis, it's all as worse or worse today than it was. And so you kind of have to scratch your head a little bit and wonder how long this advance in stocks can continue. And I think a lot of it's driven by, these artificially low rates. People don't have a lot of other options in terms of where to go and chase some returns. It hasn't been in precious metals. certainly not in the bond markets or in your bank account or CD or anything else. So it's sort of like you're being forced to chase returns into a stock market that looks like it's gone beyond levels that are sustainable. But as much as I've been bearish on it and predicting some kind of big crash, I've actually just been, the trend is your friend is what I've been saying to my subscribers. And so we've been riding the trend higher with certain energy plays, agriculture plays, and some tech stocks as well. That's sort of helped to mitigate some of the pain in the portfolio from the mining stock position. So as much as it may not make sense, I think it's you kind of go where the trend is and just have some sensible stops in place and realize that it can't go on forever. But I certainly want a piece of the gains as long as it's riding higher.
Makes sense. So keep those stops close. Let's talk about mining stocks when we return on the Financial Survival Network.
FSN Radio. Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
And we are back with Jason Hamlin on the Financial Survival Network. So, Jason, what about these mining stocks? They've been literally in the dumps for years now. The less viable entries into the market, all but dead now. You got companies that, even ones that were viable, literally counting paper clips to stay in business. And now appears that the tide might be turning. Do you get into them now or do you wait a little while? I mean, you've seen some good advances off of very low bottoms, obviously. Do you play the GDXJ or what do you do here?
I'm just starting to edge back into mining stocks. We made our first new addition to the portfolio last week and hadn't done it in months, which has been frustrating and kind of, boring to subscribers that I'm not sending out a bunch of trade alerts. But I think, sometimes it is best just to have patience and sit on the sidelines. But we're starting to see signs. One good thing was that mining stocks sort of led precious metals higher during the recent advance, which you always like to see. But what I really like about, in some ways, this whole correction was great for the mining industry because it shook out some of the weaker players and it's brought a renewed focus towards reducing costs, improving efficiency of operations, and just overall having management sort of right the ship. Before they didn't have to. Prices were rising so fast, revenues, production, profits going up. And there wasn't a whole lot of focus on that. And over the last few years, they've had the time to do that. So we're seeing a lot of optimization in the terms of the way they run their mines and they run their business. So I think the mining industry is going to come out of this stronger than they were before. One caveat with that would be, you still have to be very selective and you still have to pick best in breed stocks where you have high grade, low cost, experienced management, politically stable, minely friendly jurisdiction, and a good, strong balance sheet. You need to have all of these pieces in place. You can't just throw a dartboard and pick any mining stock like you could, 7 or 8 years ago. So I think it's more important than ever to do your research and do due diligence before picking up mining stocks. I like the GDX or the GDXJ. I think those are fine funds for people to get into. What I always try to do is use that as a benchmark and try to outperform with our stock picks. I certainly think you can do it if you want to put the time in and try to find the stocks that are undervalued and that can outperform the sector as a whole.
We got any hints here?
Well, I remain bullish on royalty and streaming companies. That's been one of my favorite sectors. I like the fact that they have, you know, the same upside as mining stocks. When their partners hit new discoveries or increase production, they get upside there, but they have limited downside, so their risk isn't the same as a mining company would be. So I continue to like to. We have a high allocation in our portfolio of royalty and streaming companies. But there are a few silver companies that I really like now that are just strictly mining companies that have had their projects, on care for a while. They shut down their operations because prices were low. And over the last year or two, they've just been focusing on improving the efficiency of their mines, getting their costs down. And as prices continue to rise, they're looking to restart their mines. And so, they're looking at 75, 80% declines from their highs a few years ago. As these mines start to go back into production and their revenues and cash flow pick up, if the price keeps continuing higher, I think we're going to see some extreme leverage in some of these mining stocks.
Yeah, so some of these pure silver plays are starting to look better, especially ones with lower cost of production, huh?
Absolutely. Yeah, that's key to look at the higher grade mines, the low cost of production, and, in the right jurisdictions. So, there's only a handful of silver mining stocks out there, so I don't want to give away what are our favorite, but there's certainly some easy ways to get exposure to that. And I think silver is probably going to outperform gold. And if you get the right silver mining stocks, you're going to get leverage to that outperformance in silver. So I think we could see some really, really a return to, explosive gains in this sector if this move higher in gold and silver is sustained. And I expect that it will be throughout the end of the year and into 2015. And, one key reason.
And beyond.
And yeah, absolutely beyond. We've got quite a few years, I think, before we even start to talk about a top. So, I remain optimistic.
Yeah, and really the pure silver plays, they've gone up a bit, but they haven't exploded by any stretch, have they?
They haven't. No, not yet. And in fact, gold performed a little better during the correction. Well, a lot better than silver. Silver obviously is more volatile in both directions. And so as we turn around here and start to head back up, I expect the gold to silver ratio to drop, for silver to outperform by a wide margin. And there's lots of reasons to expect that this move will continue. I mean, there's lots of shifts happening geopolitically, especially with the dollar. Obviously the dollar and precious metals having an inverse relationship. We're starting to see pretty significant shift away from the dollar as a world reserve currency. You have Russia and China signing a huge gas deal to bypass the dollar. Nations all around the world, the BRICS nations, everyone seems to be, kind of sick of the U.S., the way that they bully people financially and militarily. And, what's the point of continuing to have to go out and buy dollars for trade when they can trade directly in local currencies or in some instances even using precious metals? It's a big deal. I don't think a lot of people realize how significant it is that we've had the world reserve currency for so long and the petrodollar reserve for so long. That's given the U.S. the ability to spend beyond our means, to live beyond our means, and to export our inflation so that we didn't feel it so much. But as nations around the world stop using dollars and dump their dollar holdings, dollars or debts, I think we're going to see an increase in the difficulty back home for the U.S. to be able to finance wars and finance, their deficit financing and such. And as that happens, the dollar is probably going to start to lose value more rapidly. And I think that will spark gold and silver to move even higher.
Yeah. And, what you're saying, commonly accepted wisdom among those of us who follow such things. But among the vast majority of the American public, you're right, they're totally clueless. And it's going to take them completely by surprise, isn't it?
Yeah, I think so. People don't realize it. And in fact, I think a lot of the major wars we've been involved in over the last decade have at least partially been to continue the dollar as the petrodollar status and to hold it up. I mean, the intervention in Libya, And in Iraq, I don't think it's coincidence that it came right after the leaders of both of those countries started publicly announcing, a move away from using dollars in their oil trade. And even in Libya's case, coming up with a gold currency or a gold-backed currency. So it's such a threat to U.S. global power that we go around the world and kind of use our force to make sure that the dollar remains.
Hey, what about that Iraqi dinar? I don't think that's going to happen so quick now, do you? I thought it was always a scam, by the way.
I did as well.
People would tell me about it. I would just roll my eyes and say, you really have no clue how the world really works.
I had a few friends email me and say, hey, what do you think of this? Is this a good investment opportunity? And I told them to run in the other direction. So it looks like that proved to be true.
It was never going to happen,
Yeah, absolutely. And now, everything we did in Iraq seems to be all for naught, with this ISIS fundamentalist military group I can't believe they're taking control of huge parts of the country and Syria as well. They took over the central bank in Mosul, and 450 million, I think, was the number that they stole from it, making them the most wealthy terrorist organization in the world. And now they control the largest refinery in Iraq. It seems like nothing can stop them. I think there's a little more to, behind that story. Like,
you are correct.
In terms of why did we let them get this far? How did they get all of this military equipment from the U.S.?
Why those new Toyotas?
Yeah, it's hard to piece together exactly what's going on geopolitically there, but the instability in Iraq and the chaos in the Middle East is going to continue to push prices of commodities higher as well, I believe.
Certainly energy prices, if they don't go higher, they're certainly not going to go lower. And there are many interests in this country that are not unhappy about that. That's for sure.
I think these latest developments also highlight the follies of intervention in other countries, sticking our nose in everyone's business, pretending that we can export democracy and show other people how to live, by our standards. And all of those lives we lost and all of the money we poured into that, it seems to be like, for what? And I hope we're learning from those mistakes going forward.
Yeah. My campaign slogan for anybody running for any federal office is, let's go back to 1913.
Yeah.
Before the Fed, before the income tax, before World War I, when we didn't have a standing army. The reason we couldn't get into World War I until like 1917, late 1917, is because we didn't have a standing army. Right. And we were on the gold standard and, we didn't bother anybody, and pretty much nobody bothered us. I mean, we had some adventurism and empire building, but it was very minor compared to what's happened since, and none of it has been positive. And now look, it ended the way it has to end. So agree with you there. Hey, Jason, just tell us where we find your work, how to connect with you, and all that.
Okay. My website is goldstockbull.com, and I publish a monthly newsletter that takes a look at macroeconomic stuff. I look at the geopolitical stuff, what's going on in the world, and how that impacts different investment sectors. And then we have lots of stock picks in there and a model portfolio for which mining stocks we believe are going to outperform, as well as energy, agriculture, and a few other sectors. So that's goldstockbull.com.
And we love the ag sector right now, especially pork and hogs and beef going at record highs. They're going to go higher later on. Nothing's a straight line. So you find the link in the show notes on this interview on financialsurvivalnetwork.com. Don't forget to sign up for the newsletter. I'm pumping one out this weekend for sure. There's just so much going on, and I can't hold it back anymore. Jason, thanks so much. Always a pleasure. Talk to you real soon.
Thank you for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.